Welcome to the Commercial Real Estate Show. Thanks for joining us to lead, learn, and laugh. Learn market knowledge and best practices to lead your company's success. And that's whatever type of company you work with. And laugh, I believe we have to have some fun along the way. Well, hello, I'm Michael Bull, your host to the world of commercial real estate. Remember, if you have any questions or comments about our topic today or about any commercial real estate related endeavors, give us a call. Our phone number is 888-612-SHOW. You can also reach us by carrier pigeon, smoke signals, charades, Ouija boards. You can find your favorite medium at the Commercial Real Estate Show website, commercialrealestateshow.com. Well, today we're going to explore the U.S. retail market. You know, I think retail is one of the more interesting types of real estate because there are so many influences that affect it, and the spaces are so public in nature. Many feel retail has more upside than other property types at this point in the cycle since the sector was hit so hard in the recession. So today we'll take a look at the investment market. We'll also look at property level performance and the factors expected to affect retailers and retail real estate moving forward. Well, please welcome my first guest, Dan Fasulo, Managing Director with RC Analytics. RC Analytics does a great job analyzing and reporting on sales of income-producing properties, including office, industrial, apartment, hotel, and retail. They look at sales of 2.5 million or greater in the U.S. and 10 million or greater outside the U.S. Since 2007 alone, RCA has recorded over $5 trillion in commercial real estate deals through 126 countries. Dan Fasulo, thanks for joining us today.
Thanks for having me, Michael.
Well, thank you, Dan. I know you're in New York, and you've had a real good hot season there. Thanks for calling in. And let's start with retail sales volume and cap rates. What's the trend so far this year? What do you see?
We had a pretty good first half. We're actually producing our mid-year statistics as we speak. We did about just under $10 billion worth of retail sales in the first quarter. It's down a little bit from that same quarter in 2012, but that was to be expected, especially after that massive fourth quarter we had last year. Everyone was rushing. I think we talked about it to meet the tax deadline.
Mm-hmm.
But on the bright side, splitting apart the nationwide numbers, the sale of strip centers has increased significantly, up about 30% year over year, and just the count of properties trading as well is up significantly, which tells me that smaller properties are starting to trade, which is different. A couple of years ago, it was really the institutional quality strip centers that were changing hands and seeing the value increases. Now the market is starting to spread out to all the properties.
Well, that's a good indication of a stronger market. That's good to hear. And what do you see for cap rate variances between some of these property types? Are you still getting the lowest cap rates in the high-end Class A core assets?
Yeah, we certainly are, and arguably in certain prime submarkets around the country, cap rates are at or close to all-time lows again. But nationwide, we continue to see cap rate compression. We're just north of 7% nationwide. That's down from maybe a high of a little above 8% at the bottom of the market in late 2009, early 2010. We've had some volatility in the debt markets over the past couple of months with the 10-year shooting out. It's settled down a little bit over the last couple of weeks. So we don't really have the impact of the last couple of months in our stats yet. But when there's this much momentum and NOIs are still way off their kind of peak highs, I think I'd be surprised if we didn't see some continued cap rate compression over the next 12 months.
Okay, so NOIs still aren't where they were before. And is retail really the trailing sector still of commercial real estate?
You could certainly argue that it's lagged in this recovery cycle, but that's what's benefiting it right now. investors really came out guns blazing for multifamily properties and CBD office properties, which became kind of the favored property sectors. But that created a significant spread in pricing and cap rates, and it's really that spread opened up to a 5 or 10-year high even, and that spread has really attracted capital to the higher yields available in retail versus like a multifamily.
Okay. We're talking with Dan Fasulo with Real Capital Analytics. And Dan, what do you expect to see for cap rates moving forward?
Yeah. I mean, like I said, I'd be surprised if we didn't see continued compression. I mean, all bets are off if something happens and the 10-year really shoots up into the atmosphere. I'm not expecting that, and most aren't. I think, the majority of your industry pundits believe that the market has stabilized fundamentals, and we're starting to turn the corner, and there's more debt available across the board, not just for the institutional assets anymore, but for smaller assets and in secondary geographies. Everything tells me that bodes pretty well for cap rate compression.
Yeah, I think the lenders are pretty aggressive out there for the right sponsors and the right properties. So Dan, which markets are hot right now? There's certain areas of the country that are stronger.
Yeah, certainly those kind of gateway cities continue to attract the majority of the press attention, and certainly the numbers have gotten pretty silly once again. But the real big gainers year over year in sales activity, transactions, has been those secondary markets. Mm-hmm. Equity and debt capital that's gotten priced out of your Manhattans and DCs and Atlantas, and LAs is now going into places like Atlanta, Phoenix, Florida, Texas, Minneapolis has been hot, Denver. And that's where the capital is hitting right now.
Okay. Well, that makes sense. We're seeing that, our office is headquartered in Atlanta, and, the core assets certainly have a lot of demand, but we're also seeing a lot more activity on the B properties and some of the smaller assets. So we're seeing it on the ground here for sure. Well, Dan, what about distress? How much volume do you expect to see in distressed real estate moving forward? Are we past the curve there?
In my mind, we are, and according to our statistics, we are as well. We're very much moving into the later innings of the distress cycle. In certain markets, a majority of the quote unquote troubled assets have been resolved either through a sale to a third party or due to a recapitalization. I think anyone that's at this point still waiting for this wave to come is going to be waiting for an awfully long time. If anything, there's going to be a trickle coming out little by little over the next year or two.
Yeah, that's a good point. I think it's a great time to buy right now, especially while we know interest rates are favorable. Well, where do you see opportunities in the market, Dan?
I think I think your local, more private investor, someone with entrepreneurial knowledge. This is the right time in the cycle in my mind to be an entrepreneur, to buy an asset that needs some repositioning, either on the space side or in the finance side, and the players I see that are in that space right now are taking advantage of that spread and stabilizing properties, and I think they'll do really well after a couple-year hold.
Okay, and we're short on the break here. We're at the break, and so, well, Dan, I have to thank you for joining us today. We appreciate it.
My pleasure, Michael.
And if you'd like more information from Dan, you can get it at rcanalytics.com. Well, stay tuned. We're going to have more insight on the retail market. I'm Michael Bull, and this is the Commercial Real Estate Show. We'll be right back. The Commercial Real Estate Show is brought to you by professionals at Bull Realty, Cone Resnick, France Media, Atlanta Office Liquidators, and Weissman Nowak Curry and Wilco. For more information about these companies or to access additional show podcasts or videos, visit commercialrealestateshow.com.